Okay, good afternoon, guys. So I'm just returning back from where I went to. Gold has been playing perfectly well according to plan. So let me just do a quick analysis. I think this video should not be more than because it's very clean and clear, very simple and easy to trade. So actually, when we got that, we got about 1980 level yesterday, the 20th of what's it called, July. So I told you guys that gold will be, we'll go to our resistance, sorry, our previous resistance zone. So I told you guys gold will be doing an ABC move to the downside to 1940 before buying back, which I know I've been conversant with gold behavior. That's why I gave that analysis, and I was sure it was going to happen until I wasn't sure it was going to happen until yesterday. And you know what I usually do at Vision X? I usually follow market structure, and what I saw yesterday was that if this trade was supposed to continue to the upside, we are supposed to just, break structure according to, market structure. So that was a break of structure, but there was no volume. There was no volume to break that structure because we need volume, a lot of volume to break the structure, retest and continue going that particular resistance. Sorry, since we couldn't break it and I was getting all these vibes, so that was why I told you guys yesterday that if you see my, I was trying to upload a video yesterday, but it didn't work because this is a change of character to the downside. So I put this change of character here. I think when we are still at 1980, I was saying that we'll have to change character to the downside by, breaking this structure because this was the last higher low that broke this one. So we coming back to the downside to break it, we change the character back to the downside. What do we do at Vision X? Remember, what do we do at Vision X? After every first change of character, what happens? We retrace just the first change of character back to any position. That market retraced back to just 0.382 retracement level. So did we get there? Yes, we did. And we got to 0.382 retracement level. So if you've not sold around these, what's it called? This is the 1 hour structure. So this is the 1 hour to drive the structure because all I look for is structure. Anywhere I see structure, anytime from I see structure, I drive that structure from that place. Are you getting? So this was where I was yesterday. So if you're on the lower time frame, maybe the 5 minutes, you would have caught 1972. Okay, I think I caught this trade from 1976. 1976 because I was waiting for this internal structure to come back. So I think I caught this trade from 1976 because I was waiting for that switch, cashing it, then took profit at 1970. Then I took 1973 again to 1965, I think so. So 1965, I think so. Sorry, 1965. So this was what I took before this morning. I think this morning or so. So going back to my 1 hour structure, I don't want to distract myself with the lower time frame structure. So if you know that your market, like I was saying before, if after every break of structure, the market switches 0.5 to 0.5, don't forget that. Sorry, I say 0.5, sorry. After every break of structure, or sorry, after every change of character, let me retrace my mouth, sorry. After every change of character, the market retraces back to just 1970, sorry, back to just 0.382 retracement levels, which perfectly, touch. So you're supposed to enter a sell trade. I would have given this trade on my Telegram channel if I was around. And you get me, enter a sell trade from there because this is a valid change of character. Anything that makes the market come back to 0.5, 0.618, leave that trade. That is not a valid change of character. That was not a valid sell trade. Every first change of character does not retrace as much. Once you see your trade going to 0.5, leave that trade. And what did I tell you on our take profit side? If you have entered that sell trade, man, leave that trade to run up here. Fibonacci Trend Extension of 0.786. So you can take profit from two places. You take the first profit from 0.618. So put your first trend extension here, and the last one here, and the last one at here. So right now, our first take profit is 1959 or 90. Then our second take profit is 1956.5. So the market is definitely coming to 1966.5 before doing another structure formation again to 1973 area. Like you see what happened at the bar, as in our higher time frame, our 40 time frame. After getting to what's it called, we will definitely find this is a demand zone, whether I like it or not, because it was a valid break of structure. I guess, and so this is a valid break of structure to the upside. So I'm just trying to run this market very, very fast for you. So 1956.5 should be take profit of 1957. Anyone you can take, anyone you take. So from there, you know that the market is definitely going to do what? Find, this was what brings the structure to the downside. So definitely there is demand in this area that would come 0.786 and find a means to shift. So once I see that our W character pattern shift, might be today, might be till next week, then we'll take on that buy again from these sniper entries back to 1972 to 1973 area. And once we are getting any bearish engulfing candles around here, we'll sell again and take our ABC move. So overall, if I should drive this market structure, how it's going to play out, I'll tell you. Sorry, let me bring up these guys back. If I should drive this market structure and how it's going to play out, if I take this off, so I'm just going to drive the market structure that like this, because this market is going to bounce back from here, then come back to our what's it called, our previous high, then sell to 1949. So overall, this is my structure right now. So overall, this is my A, B, C to 1949. Are you getting it? So anything that happens here, I'll start buying from here. So anything that happens here, I don't know if it comes back and do probably 1, 2, 3, 4, 5. So I will just follow structure. So these are the two trades I have for now. I'm expecting a bounce. Are you getting it? I will be expecting a bounce back to 1972, for a bigger picture. So this is a 1 hour time frame. So I use all these Fibonacci extensions and Fibonacci tools to build my market, because if that's the case, that this market is still going to do a switch to the downside from here, 1976 area, then come back to 1973, 1972 area, our take profit is at these lows. So is what is it going to build? If it's going to hold here, we'll try to find out from there. So it's going to build to 1948, 1949 area, and find probably the market, because this is liquidity. We need to take this liquidity. If we are not reclaiming, if we're not reclaiming here, if we're not going to reclaim here, continue going. Are you getting it? If we're not going to break up, then do a switch back again, 0.382 switch, and continue going up. That means that we definitely complete this A, B, C move to the downside, then find a means to come down again to this area, taking this liquidity before we build our markets and start going back up. So watch out for your market structure. I don't know how you trend your market, but this is how I trend my market, and pretty much just follow structure. Just follow structure. Follow structure, because if you're following structure, you would have known that after that break of structure, and I usually tell you that the market does not retrace up back to 0.786, you can use something else. What can you use? You can use your area of value, like, okay, this is a lower, this was a previous broken, what's it called, support. It will turn to resistance again, and it will also correspond with your 0.382 retracement levels. And if it does and it start going down, just enter that trade, and use your Fibonacci Trend Extension, and just say that it must get to 0.786. It has gone to 0.618. Yes, it might be finding a little bounce, but it must definitely get here. It might even bounce back higher, but it must definitely get there. Just leave that trade to run to 0.786. Let it find demand. If it finds demand in this area, no matter the demand it finds, no matter the demand it finds in this demand zone, which is very large, no matter the demand it finds, if it does not break this previous resistance, trust me, the market will continue going down. So whenever, if I should take these guys off and show you something, whenever your market plays out like this, let me go to the 4-hourly time frame. Whenever you see that your market finds demand in demand zones like this, are you getting it? Whenever your market finds demand zones like this, it takes you back to the next resistance zone. Okay, so if you're finding a swish around, head and shoulders pattern swish, which that switched, if you have been entering this market and you'll be seeing all this bounce from this area, from this very first number one on the downside, we got a head and shoulders pattern reverse, and since then we're there. So if you have taken this trade around here, you would have left it in 1980 before it will find. So like I was saying, whenever your market definitely comes back to this area, definitely if you see a lot of, because this is the 4-hourly chart right now. I was waiting for volumes also on the 4-hourly chart. Look at, in this whole area, I was not getting the same vibe, the same energy it used in breaking all this. This was a break. That was why we went. So your volume indicators is an indicator also for you to know. There are a lot of factors I put together to know where this market is going to, especially my fib, my change of characters, a lot of other things I put together as a market structure trader. That's why I know that definitely 100% this market is going to come to 1956.5, my take profit. So 1973, 30 pips to 1956 with 70 pips. Just put anything you can risk to it. Are you getting it? You can afford to lose. Put my 50 pips stop loss. Use 50 pips, 30 pips stop loss. Use what's it called? So that you can get a 1-to-2 risk to reward ratio for 70 pips from 1973 to 1956, which is 70 pips. Are you getting it? That's another swing trade to the downside again you would have made. So whatever happens, you would know that definitely after finding that bounce, the market is coming to the next major resistance, which it perfectly went there. Then if we go to the lower time frame, there's another thing I used again on the lower time frame. Aside from volume, I don't play with my divergence. So definitely, if this happens, that means there's also divergence on our RSI, and this is what a bearish divergence. The buy momentum was going down. Are you getting? So you can see the market never lies if you know what you're doing. So this was a bearish divergence happening around that area. So divergence to the downside. How do you know it is divergence? All these things are, buying the RSI is your relative strength index, and it shows you what is going on around that particular time. So the market was definitely going up, but the buy momentum was falling. Are you getting it? Like we did on our RSI divergence at the downside. Like look at the market was coming down, but buy momentum was rising on our. So you should learn divergence also. You will see that it will help you make better decisions when trading. Are you getting it? So this was the divergence we had on that top, which confirmed to me that this market is indeed about doing an ABC move to the downside. And as you can see that it's trading, the market is selling down back to 0.786 resistance level from the top, because if the market retraces 382 and breaks structure again to the downside, the market is going to get to 0.786 resistance, support level before bouncing. And when the market bounces like it bounced on the 4-hourly again, might bounce all the way back to, are you guessing it? It might bounce all the way back to this previous resistance. Don't forget your support and resistance, your previous one that caused problem in the market. Don't always forget it. Are you guessing? Don't always forget it. So if the market does this and continue breaking structure to the downside, it will definitely find support in this minor, minor 1 hour support zone. So once you find support, it will come back. Anything that you see that is making this market switch again to the downside, like a switch here, you should do what again? Enter, then find a means, to say, okay, if this market breaks structure, it's going to come back to that structural level and start selling again. That's when you take your trade and go for the next trade, which would say that this is the bigger one. After smaller one comes from the bigger one, which is going to take you back down to 1951, 1950.87 area. Definitely depends on how your candles, your market structure builds. Are you getting it? Except this market is breaking to the upside, you know that we've broken above what was it called, previous area of value, a previous high, lower high that brought this market to the downside. So retracing back to 0.382 again, I tell you, after every exchange of character, you retrace back to 0.382, and you can see that your market has Segobe continue to the upside. So it's as simple as that. I know it's very hard, but if you slow this video down and follow up, I didn't want this video to be very long. That's why I did not talk about. But here right now becomes what our important area of value, that if this market comes back to this area again and find what resistance, are you getting it, is going to turn to a very bigger problem for a very bigger problem on the 4-hourly chart, where you see that we will reverse back, are you getting it, to the upside, reverse back to the upside. But since this is an uptrend, it might just find what's it called, this is an uptrend. Watch out for these particular areas coming back to this previous 1 hour what's it called, resistance. Then if you find resistance and you are seeing a bearish engulfing, a bearish candlestick chart pattern, it might be a gray stone doji or shooting star, anyone you call it. Once you're seeing it with a confirmation red candle, sell that market to the next resistance. So this is how I look at the market. And sometimes because of liquidity, it might go from 0.786 to to 0 to 1. So my end from here, then come back here, taking that liquidity, it might come all the way down to 1942, 1943. So this year I want to be buying from. Then I know we'll have completed 1 point, so ABC move that might take this market 2050. This is what I have for you, and this is what I have for you today, Friday, the 21st of July, 2023. Looking to take some kind of crazy trades from next week, because I have to meet up something very, very, very important next week. If you have any question, you can message us at VisionX Limited. You can go to our YouTube page, you can go to my Instagram, any other place you can contact me, especially my Telegram page. You can write me on there very, very fast. You getting this? This is what I have for you. If you have any questions, if you have any queries, watch this video over and over again. Apply it to your other kind of, your other market structures, and it will definitely help you. Are you getting it? This is good. And today is Friday. Thank God it's Friday. Enjoy yourself. Trade responsibly. Take care and bye for now. Bye.